Hey everybody, this is Ray Halstead and Andrew McMillan with REH CPAs. Today we want to talk about an often missed tax deduction for rental property owners, and it has to do with whenever you get a roof replacement. We've got Andrew McMillan here with me today. Andrew, what can you tell me about this often missed tax deduction?
Yeah, so just be aware, like if you have a rental property, a commercial rental, a residential rental, that if you're probably gonna have to replace that roof at some point or replace that HVAC. So when you do that, you actually have the opportunity to figure out how much that old roof costed you when you first purchased the property and take an immediate tax deduction for whatever cost value that is that hasn't been depreciated. So kind of backing up a little bit to explain it a little bit better, like when you originally purchase a rental property, a commercial rental, a residential rental, obviously you paid, let's say $500,000 for that piece of property. So that purchase price included a lot of different things. It included land, it included the structure, it included the roof, windows, lighting. There's a lot of things that it includes, but the general rule is to just carve out a piece for the land, and whatever's left over is depreciated over, 27 years or 39 years. It depends. But it's depreciated over a long period of time. So when you buy something, you don't get a really big immediate write-off. It's a long, drawn-out write-off. So as time goes on and things wear and tear, let's say you have to now replace that roof 5 years later for $10,000. Well, you're required to put that roof on your books and write it off over a long period of time. You just paid 10 grand, but now you've got to write that off over potentially 27 and a half years or 39 years. It's a very long write-off. It doesn't feel real good, when you just had to stroke a check for a big amount of money. Mm-hmm. So what the IRS has now done, which is really awesome for everyone else, is they allow you to figure out how much of that original purchase price was allocated to that roof when you originally bought it, and you can take an immediate tax deduction for the basis of that, the undepreciated basis of that. And so when you bought that $500,000 rental, you started depreciating it, so you started writing it off a little bit, but you still got probably a significant value left that you can write off. So right. It really allows you to feel that deduction for that money that you just had to pay for that roof, because rather than, you do have to put that roof on there and write it off over a long period of time, but you can figure out what that basis was of the original roof and go ahead and deduct that on your tax return and get a deduction for it.
Yeah.
So it's something to be mindful of. Oftentimes we see it missed where people, they buy that new roof, you put it on the books and you just move on. But just be mindful of that you can write off that old balance. And oftentimes clients are like, well, I didn't break it out. How do I even know what that value is? The IRS was aware of that potential issue, so they did give us some options there to navigate that. There's this consumer price index, which basically is like a time value of money calculator where you can back into that number.
Yeah, what you do is you take, I guess, the new roof cost, mm-hmm. and you use that consumer price index to find out what that new roof, like if you took that, say the new roof is 10 grand, mm-hmm. and you find out what 10 grand was 5 years ago. Yeah. Let's say it was 9 grand. Say mm-hmm. 10 grand today is 9 grand 5 years ago. Well, then 9 grand is what you would write off. Mm-hmm. And then you just got to figure out what portion of depreciation to remove from that. And, that's how you calculate it, right?
Correct. So it's a real big tax saver for clients. Oftentimes I have a lot of new client meetings, and it's like, well, do you really need a CPA? Usually if you have rental properties, that's kind of the first threshold where I feel like, man, you probably do need to start seeking some professional advice, because at least to get it set up correctly. And there's a lot of nuances to it. So the value of having, a professional who knows these rules can really save you some tax money down the road.
Absolutely. Really good information, Andrew. Well, if you have a rental property and you've got questions on tax deductions, feel free to give us a call and we'll help you out. Thanks.